Hi everyone. In this tutorial, we are going to learn about what is depreciation and how do we calculate it in Excel. So, if we look at the definition of depreciation, it is the normal wear and tear in the asset, right? So, naturally, if we are going to use our machinery or plant or building continuously, it is going to suffer from some kind of wear and tear. So that wear and tear is termed as depreciation, and there are many methods to calculate it. So you can calculate it either through straight line declining balance method, which is also known as written down value method, sum of the year's digits, or units of production. So these are the methods which are listed in generally accepted accounting principles for depreciation. Otherwise, there are others also, such as sinking fund or insurance policy or annuity method, right? So in this tutorial, we are going to focus on straight line depreciation and fixed declining balance method, which is nothing but your written down value method. So let's move on to the question. So they have given us the data that this is my initial cost, then this is my salvage value, and a lifetime is 5 years. So let me quickly write down the years first. Yeah. So now my opening balance is my initial cost only for the first year. Then my depreciation, the formula is SLN, straight line method. So as you can look at the syntax, first we have to write down the cost, which is 5 lakh. Now I will fix it by pressing F4 because I want to drag my formula to other cells also. Then my salvage value given to me in the question, again I'll fix it, and my life. So again F4, I'll close the bracket, press enter. Then my closing balance will be my opening balance minus my depreciation for this year. I'll press enter. Now my opening balance for second year is my closing balance for the previous year, and my depreciation will be the same. So I'll press Ctrl D and duplicate it, and this also I'll duplicate. Now I'll select this cell, all the other cells, press Ctrl D. So as you can see, I have depreciation for all the years, which is same as 90,000 and 50,000, which corresponds to my salvage value given to me in the question. Now come to fixed declining balance method. So I'm taking the same the question, the values. Now the years are 5. Now let's write down my opening balance, which is my initial cost. I'll press enter. Then I'll calculate my depreciation. So the formula for that is DB, which means declining balance. Sorry, I have not written equal to sign. See, now it is showing me the syntax. So the first thing that I have to enter is my cost. So cost is 5 lakh. I'll fix this. Then my salvage value is 50,000. Again I'll fix it. My life of the asset is 5 years, and period is 1, the first year. Now as you can see, they were asking me months also. So this is in the case you have bought the asset in the middle of the year, let's say July or September, right? But now we are assuming, unless and until it is mentioned in the question, we will always assume that it was bought in the first month on the first day, right? So I will simply close my bracket, press enter. Now my closing balance is my opening balance minus my depreciation, and I'll press enter. My opening balance is the closing balance of the last year, and this will be Control D, duplicate, again Control D. So I can do the same for other cells also. I'll just press Control D. Now you can see uh, uh, this is the 6th year, right? So this is giving me num error because there is no 6th year here, right? I can simply delete it. Now come to the second part. What if the asset is purchased during the year, right? So let's say my asset is purchased on 1st of October and year ending is 31st of December, right? So this means in the first year I only used it for 2 months, right? So this automatically means I will use it for at least 10 months in the 6th year. right? Only then my asset should arrive at my salvage value, right? So I'll just quickly repeat what we have done in the above question so that I have my values, right? My opening balance is 2 lakh. My depreciation will be SLN cost, which is I'll fix it by F4, then my salvage value, again fix it, and life 5 years, right? I'll close down the bracket. My closing balance is opening minus my depreciation. Now my opening balance is the closing balance of the last year. Depreciation is the same, right? I'll press Ctrl D and Ctrl D. Now I'll copy down this formula by pressing Ctrl D to other cells also. Now we have to adjust it for the 2 years, right? So as you can see, so in the first year I have to, I'll open down my, I'll cut open my formula. Now I will take a proportionate depreciation just for the 2 months for which the asset was used. So this is very simple. I'll just multiply it by 2, divide by 12. So that means I'm taking a proportionate depreciation. That please calculate the depreciation for only 2 months, which is November and December. I'll press enter. So now you see it has automatically adjusted. So I'll do the same for the 10th month, in which, sorry, for the 6th year, in which I have used it for 10 months only. So I'll multiply it by 10 by 12. So you see now I have my salvage value as 50,000, which is exactly what I want and which was given to me in the question, right? Now we can do the same for declining balance method also. So my opening balance is the initial cost, then my depreciation is DB cost. I'll fix this. Then my salvage value, again I'll fix it. Life is 5 years for the asset. Period is the first one. Now this I will not fix, right, because it will keep changing. Then the month. So now you can write down that only 2 months for which we are using. I'll close down the bracket, press enter. Now my closing balance will be my initial cost minus my depreciation, right, and my opening balance is the closing balance. Depreciation, I'll just press Ctrl D. This also I can just press Ctrl D and duplicate the formula. Now I'll extend it to other cells also. So now you see this value is approximately equal to what we wanted as salvage value, which is 50,000, and this is 50,584, which is more or less the same, right? So that was your depreciation. If we buy it in the first month, or if we buy it in the middle of the year. So I hope it is clear to you. Thank you.